Hi everyone, welcome to RHB Bank's Money Chat series. I'm Nova Lui, Head of Investors Advisory. As the much spoken about equity market usually tend to rarely post general election to give investors the good feel factor of the current ruling government. However, due to global market sentiment, most equity market has been trending down, including Malaysia equity market, which has been down on the year-to-date basis. Is there any opportunity for investors in this environment of potential mispricing due to market uncertainty? Let's hear from our expert today, Dato Teng, Managing Director and Executive Director from Affin Hwang Asset Management. Hi, Dato Teng. Thank you very much for joining our show today. I'm sure our investors are very much anticipating the potential investment opportunity from this upcoming election. Would love to hear from yourself.
Good morning, Noah. Thank you for having me this morning. I'm glad to be here this morning to share my thoughts on Malaysia, on the broad macro of the global economies, and also what's going to happen to Malaysia post the election after the polling date on the 19th of November.
Sure. Another thing, despite the weak broad market performance, there is also some sectors that always perform better than another, which also perceived by investors as the sector for election flavor. Can you share with our investor what are the sectors that you think could give investors some upside potential on the general election play?
I think this election is very different from previous elections. I think in previous elections, typically we have the markets that tend to be very robust before the election, and then after that it goes quiet just before the polling date, and then depending on the end results, we see rallies in the marketplace. I think these elections were coming on the backdrop of a very weak economic cycle. We had COVID-19 to deal with in the 2 years prior to this, and today on a global basis there is a macro issues that are unfolding. Whether it's interest rates, whether it's geopolitics, whether it's China, all these things are interlinked and they affect market sentiment. Regards to directly to your questions, really about Malaysian market sectors that used to benefit each time when we have election. Typically, we have seen fiscal spending, right, in a big way prior to election, and construction firms tend to benefit from it. But this round, they are nothing much because I think we are coming from a perspective that for the first time we're entering to another election where it's a government that's put together on a coalition basis. So I think it's a very different outcome altogether, and I would cautious investors to see that this cycle will be very different from previous cycle if you actually look at elections in relation to markets.
Another thing, the budget 2023 was announced just a few days before Parliament is dissolved. However, note that GST re-implementation is not mentioned in the budget. Do you see that coming in after election? And is there anything our investors need to watch out for?
I think the tax structure in Malaysia is still very narrow. I think if you look at GST has been implemented, whether it's called GST or VAT, whichever word you use, right, it's the same. And you've seen it globally, right? I just came back from Europe, and they have VAT of 19%, right? Even in Singapore, a city state like Singapore that's really running surpluses, they have GST and they've just raised the GST rate. So I think it's inevitable at some point that Malaysia need to address the direct tax that we have. That's very high. Over time, if we continue to maintain a very high direct taxes, it means that we become very uncompetitive as a country. We will lose talents to other countries, right? And that's not good for the country over time. We need to broaden our tax structures. We need to think about how to find new revenue, source of revenue for the government. We need to figure out, end of the day, the subsidies that we are undertaking is not sustainable in this country. It's very high and also not productive in nature. So all these things pertains to really the entire budget that needs to be fixed and post-election. I'm not saying that the government will implement GST. I'm not saying that. But what I'm saying is that the GST structure that we have had been a good structure. Unfortunately, because of manifesto, it has been removed, and it's such a waste. Tomorrow, if we need to bring back GST, we need to spend millions to implement it again. How I wish at the point when they remove it, they just bring it down to 2% or 0%, but keep the structure just in case we need to reuse it again. You asked me who will benefit from GST. I think it's a more broader based tax that then the country, number one, doesn't depend on commodity income. Remember, at one time we were so worried that the country depends so much on oil revenue and revenue from CPO to sustainers. When we had the GST, it stabilizes the collection of revenue for the country. Number two, I think the some of the companies that were benefiting from the implementation, I think it'll be interesting to see whether they will also continue to benefit, because there will be lots of money that will be diverted to implement the system, and some of these companies will again be looked upon to undertake that role.
To all investors, it's a very rare opportunity to have Dato Teng here with us today. If you have any question, please put in the comment box below. We will try to answer your questions as soon as possible. Dato Teng, as we are already very close to the general election, would you think that market rally or at least some boost of confidence may come in after election? Is there any situation or scenario that you think local or foreign investors would love to see in our political landscape before any further foreign fund flow into our market?
My read is that by the election on November 19, depends on the result, right? To start off with, I think every economy needs a stable government to implement stable policies, to get investors to be confident in investing in the country. I think what foremost that the markets are looking forward is really a stable government. It's a government that can last for the next 4 or 5 years. Don't be a government that keep changing prime ministers every 2 years, right? It's just not going to attract investors to the country. It's not healthy, especially in the country that's developing like ours, right? We need stability. I think that's probably one thing that was really talked about before the parliament was dissolved. That we needed stability in the government. Now, the markets will probably not respond well if we have a hung parliament. That I think is a foregone conclusion. If we do have a hung parliament, I expect the markets to react negatively. But we have a government that clearly have the majority. Whether the majority is by 10 seats or 20 seats, is good enough. At least there is a functioning government that can then implement and bring forth their policies for the next 5 years. And if they are no good, next election is called, you vote in another government. But at least let them function for the next 4 or 5 years. I think that's probably where the scenarios are. We are not expecting, markets are not very reactive at the moment to this entire GE15 because of what we talk about where we came from. But of course, going forward, if we do have a much more stable government, I think the market will respond a lot more positively.
Dato Teng, appear to me that what you have shared just now, our current election scenario may be very different from the previous election. There is no very clear direction that what sectors could so-called benefit on the election rally. Moreover, election result is very hard to predict, and the equity market sentiment is very much not only depending on who is going to win the election, but also on the composition of the new cabinet of Malaysia. So, is there any sector that you think will do well, irrespective of who will win the election?
At the moment, the evergreen sector that we've seen seems to be the banks. I think the banks recovered from COVID-19 very well. Initial expectation of very high NPLs were not they did not materialize. I think NPLs were generally manageable. There was some creeping out of NPLs, but they were just not significant, and that's why we've seen the banks have done very well in terms of performance, in terms of stock performance, and even in terms of their financial performance into this year. We continue to expect that to continue, but the caution to investors is that there is a very crowded trade. A lot of investors have been hiding because of the tough external environment. A lot of funds have been selling down on their exporters, companies that were exporting, that they were benefiting in prior to this year. They've been shifting their exposure to the banks. So to me, it's a very crowded trade, but to me, it's probably the only trade at the moment that looks very attractive, because also the banks are paying dividend yields in the north of about 3-4%. Some pays as high as 6-7% dividend yield. So that's a very attractive transaction for a lot of investors. The other sector that I think Malaysia has developed very well is into our exporters, whether they are in electronics, whether they are in manufacturing of furnitures. I think Malaysia over the years have established a very established supply chain into this business, and is well regarded globally. And I do expect and I do see momentum. If you look at land sales up in Penang, industrial land sales, they are well taken up. Essentially, we benefited from a diversion of trade from China. Essentially, if you look at the geopolitics that's developing in the north, you would think that most of these manufacturers are also thinking we need to diversify. We need to also think of what happened. What if the scenarios that turn up? How do we hedge our position? Where do we go if something bad happens? And when you look at the within Asia, where else do you go? I think within ASEAN, other than Vietnam, Malaysia actually stands out very well in some of these sectors and some of these segments of the export industry. So I think Malaysia benefited from it, and I think will continue. Of course, the share prices for some of these stocks or some of these segments in the exporters have actually declined by 30-40% this year. That's because it's overvalued. In the past, Malaysian exporters were trading at a valuation of about 50, 60 times multiple. And clearly, that cannot sustain. It went crazy, right? And market were pricing in long-term growth of 20-30% and prepared to pay a high price. Today, globally, we have seen a derating of a lot of these sectors. Even the big techs in US have also derated, right? We've seen the likes of the Microsofts. They all have also come down about 30-40%, despite a very impressive earnings model. So Malaysia Tech, no difference. We also have derated, but that doesn't take away the fundamental of the sector. The truth is that if you look at a lot of them, they are subjected to global demands. There's no doubt about it. But at the same time, I think if you look at the pace of digitalization globally, I believe there is a room for them to grow. It's just that this year may be a year where they may see a much slower growth because of the adjustments of inventory. Once the adjustment of inventory is over, by sometime in the second quarter next year, you will find that the growth rates will start to come back in again. So I think these are all evergreen sectors in Malaysia. The good part about having this conversation today really is that the stocks have all come down 30-40%. There's interesting levels to consider. And if you can time the entry or average in the entry, it looks interesting to me in terms of buying into one of the sector in Malaysia that has a lot of promises and a lot of skills that have been developed over the years.
Dato Teng, you have mentioned that one of the evergreen sector is banking sector. You also briefly touched about the tech sector, and the interesting part that you mentioned was on the exporters. So I think exporters' earning is also very much depending on the currency income that they receive, where like potentially they receive in US dollar. So interesting to note that Malaysian ringgit has been depreciating against US dollar to its level back to 1997 Asian financial crisis. Our investors are very concerned on the weakening of our currency. However, worth to note that Malaysian ringgit, along with other major currencies, also weakened against US dollar. Can you share your thoughts on your trend, on your view on the trend for ringgit moving forward?
I think dollar ringgit movement has to be seen in the context of the global dollar movement. Right? I don't think it's an issue of just ringgit coming off in value by itself. If you look at the cross rates against pound, against euro, against Aussie, it doesn't look that bad actually. It's only against Sing dollar and against against US dollar that we look that the ringgit seems to have come off a bit. But again, I think Sing dollar is an outlier, right? I mean, you look at Singapore economy today, it's amazing. I mean, you go to that small city down south of us, you will hear renters are going up 50% this year. Where on earth do you get rental going up 50%, right? You don't, because they benefited from what's happened in Hong Kong and the lockdown in China. the COVID-19 lockdown in China, and they benefited from it. So it's really an outlier. You hear about office rental going up. I mean, where on earth do you see office rental going up except in Singapore? And it's a very amazing dynamics in Singapore, right? So I think unfortunately for Malaysian ringgit, you tend to compare to Sing dollar because that's the one closest to us. And when you look at Sing dollar, you say, oh gee, what has happened to Malaysia? But there's no doubt you don't take away what's good that has happened in Singapore. They have done well in terms of managing the economy. They have done well in terms of attracting talent, and they've done well to restructure themselves. I remember in the early days when the Sing dollar was rising, they decided to diversify away from manufacturing of these drives. That's what they were doing in the early days. And they move on to service industries. They move on to the clean industry like pharmaceutical. There's a much higher value add in the whole process. I think that the question would be how long can the dollar strength sustain globally? I think that's probably a question to answer. Dollar today has moved up because of clearly interest rate differential that the market is anticipating, and clearly the Fed has not done with their interest rate cycle. They're going to raise rates again very soon, another 75 basis point. That's what the market expects. And then further interest rates will probably be a little bit more slower, but still there'll be a little bit more interest rate cycle ahead of us for US. I think the dollar trend may just soften the moment the market sense that the Fed has more or less done with the interest rate cycle. That will give rise to a period where you will see a weakness in US dollar sometime next year, and by then you will probably see ringgit strengthening against the US dollar. But what is important is really the cross rates. Then what will happen? When you have a period where dollar weaken and you are going to see a period where hopefully by then yen and euro will strengthen back. Then on a cross rate basis, then again we may look back and we may then strengthen against dollar. Then we will look back against the euro and the yen again. Then of course depends what happened to the European economy and the geopolitics in Ukraine, how that will play out. But generally, my view is that it's really a dollar environment that we are fighting, and there's no point. There's no point for the central bank to intervene. We are going to fight a losing war better if we were to intervene. And I think I give Bank Negara the credit for not doing anything to let it slowly find its level. And we have seen even recently, like Bank of Japan intervened in the yen market. They spent 20 billion US. What happened? The yen continues to weaken. It does nothing to it. So I think with our reserves of over 100 billion US dollar, we don't have much to intervene. And I'm glad that we did nothing, so that the dollar ringgit can find its own level. So my view is that the dollar will continue to strengthen, although may not be strengthening as fast. But until we see a period where the US interest rate starts to show peakishness, that's probably when the turning points are. And when that turning point takes place, ringgit may strengthen back again. But on the cross rates, we may lose out should other currencies strengthen even faster than ringgit on a reversal to the dollar. That's how I see it.
Okay, thank you very much, Dato Teng. That is a lot of good advice for our investor. And thank you very much again, Dato Teng, for joining our Money Chat today. Is there any last words or final advice for our investor before we end our Money Chat today?
I think the global markets are very choppy. There are many moving parts. I've been asked this last 6 to 9 months what's happening, and I can tell you, even I myself being a professional is as confused as a lot of you out there. It's not easy to read because the markets tend to be very sharp in its movement. Lots of decisions are being taken whenever there are turns in the marketplace. So my advice to you as investors, really, as you plow in your hard-earned savings through RHB bankers for advice, be mindful of the risks in the marketplace. It's risky. I don't pretend that the markets are in for a good time anytime soon. Although I think a lot of bad news have been discounted. You look at the way the market have declined, they have taken a lot of beatings. But the truth to be told is that there are still many moving parts moving negatively for risk assets. For instance, economic growth. What will happen to it in the next 2 quarters? Clearly, with the rise in interest rates, it has its implication, it has its impact. We have not felt it yet, but we will definitely feel it, right? And I think anecdote evidence of small companies operating in US are starting to show signs that things are slowing down. We need to watch the Christmas sale in Europe and US, which is really in the Western economies, which is really a big event. And if there's any slowdown, there will be inventory build up again, and that again can lead to slowdown. And data are all showing a slowing down economy as we head into next year, and potentially there may be a technical recession as we go into next year. And there's also geopolitics to contend with, right? As I said, the geopolitics are very tough to deal with because we are dealing with massive egos. And unfortunately, in the world that we live in today, we don't have great thinkers like what we had in the past who can get people back to the negotiating table. Today, the relationship between US and China is at rock bottom. It's as low as it can go. And we hope that a common sense will prevail, right? That we can all share the world together. But again, we are in Malaysia, where even such a small piece of chess in the whole world. And that's something to think about. And I think I've been on this speaking route for a long time. I've never seen geopolitics at this level. This is probably at the worst level, right? And we really have to be mindful of it and what's the implication over the next 3 to 5 years. Then there's China to contend with. Is China an investable market? The global houses have given up on China. Investors have given up. Global investors really have given up on China. They got burned so badly on their policies and the noises. They just said, I give up, right? So what do we do? How do we navigate? And I take the view that I don't think China is an investable. The sell down that we've seen last week post their conference is a lot to do with sentiments rather than fundamental. Obviously, there are concerns on their COVID-19 policy. There's concerns whether they will do the right thing and right policies. And I still think that for China to achieve the common prosperity theme that President Xi is talking about, you need economic growth. Without economic growth, there is nothing common in there. There's no prosperity to share. For prosperity to share, you need to have economic growth. And for that, you need sustainable policies. That's my basic belief. To be proven whether I'm still right or wrong, but I still think that they need to come out more forcefully to basically engage the markets and then to move away from the COVID-19 policy, which have not been seen, that they're still moving away. So as the last advice to you as investors, I would say let's be careful on the asset allocation. Don't overtake too much of risk. There's a lot of interesting things like bond yields that you can invest in. I believe there's a lot of companies raising capital in terms of fixed income at the moment. They can be a very good protection to your savings in terms of getting you the returns. Not that high, not double digit, but at least you can get in ringgit terms a lot of mid-single digit return, and that will supplement your income as you retire. So I think those are interesting times. You will never see these type of yields if it's in a good market condition. Today, because of the way the markets are, we are seeing companies coming to the marketplace and prepared to pay up in terms of yields for the papers that are coming out. So I think those are things that we are busy with, and we hope we can capture some of those opportunities through RHB giving you the advice. Thank you very much.
Thank you, Dato Teng. So you have mentioned about your view on the equity market, your thoughts about the ringgit direction, and also some tips about the bond investment into Malaysia market. Dear investors, Malaysia market forms an important part of clients' investment portfolio. Despite grass is always greener on the opposite side, however, do not forget a market which are home country to us, which we have been graph of information and market updates where investors can make positive return if investing in the right way. To get more ideas on how to invest in Malaysia market, please contact RHB Bank's Relationship Manager. Thank you very much for your time again.
Thank you very much.